Hi, good afternoon. Can you hear me? Yes? Okay, I understand that I'm between you and lunch, so I'll try and keep this relatively short and hopefully open it out to questions. Firstly, a big thank you to Ty for having me. I'm quite excited to be here. My quick introduction, just a little bit of background, and then I'll talk about what it means to do tech-led brands. I started off life as a consultant. I spent 15 years with McKinsey, where I did a lot of product development work at McKinsey in automotive primarily. After that, actually began a little bit of my startup journey. I was in Myntra for 4 years after Flipkart bought Myntra, and that was quite an interesting experience because we grew fashion e-commerce quite significantly. And at that time, in 2015, it was unclear whether fashion e-commerce would really take off because it was unclear whether people would buy fashion online. And it was quite interesting to see that it's really taken off, and now online e-commerce and fashion, it's one of the largest categories in India today. Post that, I had a small stint in healthcare where I invested into a company which is an e-pharmacy business in e-commerce called MedLife, which we then sold to Pharmeasy. And about 18 months ago, started Mensa Brands. What we're trying to do in Mensa Brands is really actually put together a tech-led global house of brands. And a bit of this is I'll tell you a little bit about what that actually means. So we have 3 areas that we focus on: fashion, beauty, and home. And across fashion, beauty, and home, we look for brands which are online, which are relatively early stage, call it 10 to 100 crores in revenue, and we figure out a way to grow and scale those brands. So that's a bit of what we do at Mensa. So I wanted to start a little bit with the context of why it's different building brands now than it was 20 years ago. What has changed in India today is historically distribution used to be the moat for building brands. To reach, we spoke a little bit, CKR spoke a little bit earlier about tier 2, tier 3 towns and how to reach them. Reaching brands, for brands to reach every part of India was very, very hard to do. With the advent of Flipkart, Amazon, Myntra, Nykaa, now you can reach 26,000 pin codes in India for, call it, 120 rupees, right? So distribution has been democratized. Therefore, if you're a brand, your ability to reach your end customer without a lot of cost and a lot of friction is very easy to do. So I think that's one thing that's fundamentally changed. The second thing that's fundamentally changed about brand building is brand building used to be primarily offline or on TV, which is you had a few SKUs, you advertised them heavily on television, and that's how people got to know your brand. Today, that's actually changed fairly dramatically. And the reason it's changed is even if you don't buy online today, you certainly research the product online. So about 8% of India actually shops online today, 8-9%. It went up a little bit during COVID and it's sort of come back down. More than 50% of India researches a product online because you have 700 million phones and people actually go research the product online. So the second thing that's really changed about brand building today is brand building happens much more online than it did before. What your friends and your community say about the brand matters dramatically more than what an advertisement says about your brand. So the 2 fundamental factors are: 1, distribution is now democratic, and second, second, people do online research for every brand, and therefore your ability to build a brand online becomes very, very different. So based on these 2, when we decided to start Mensa, we had a third factor, which is India actually hasn't produced very many global brands, at least in the consumer space. If you look at brands today in India, there are less than 30 brands in fashion, beauty, and home that are north of 1,000 crores in annual revenues. It's quite surprising. The market itself is almost $100 billion, but it's a very fragmented and mostly unbranded market. So the other big trend that's happening is there are more and more people moving from unbranded to branded, which I think becomes quite interesting because your ability to build, therefore, digital first and D2C brands becomes very interesting. So based on all of these 3 things, we decided that we would actually create a platform at Mensa. And the platform that we're trying to create at Mensa is actually quite simple, which is, can we use technology to really help brands grow and scale? If you look at brands scaling in India, there are usually 3 problems. The first is actually one of performance marketing, which is, sometimes the cost of performance marketing is a little bit more than the cost of the product itself, right? So it becomes very difficult to actually build a brand and be efficient about performance marketing. So can you use technology to actually understand the algorithms of Amazon, Flipkart, Myntra, Google, Facebook, and be able to do it much more effectively? The second thing, which is tech-led, is could you actually use content and community to build brands at much lower cost? So at Mensa, we actually have some content platforms, mensxp.com, idiva.com, etc., that we actually use as a distribution channel to say, how do I build interesting community? We have a gardening brand called Trust Basket, and we've built a community of 1 million gardeners, and they actually talk to each other and converse with each other. And brand building happens much more subtly because you're part of the community as opposed to having to advertise for it all the time, right? So how do you do tech-led community-based brand building is the second area that we actually really invest behind. The third thing in brand building where technology can actually play a very large role is how do you think about pricing, how do you think about promotions, and how do you think about discovery? So in an offline world, pricing was very non-scientific because you don't have volume price elasticity, right? You don't know what happens when you change the price. In the online world, the feedback is instant. So the ability of machine learning algorithms to figure out what the right price is for a product becomes much better. So at Mensa, we have north of 15,000 SKUs, and it's impossible to price 15,000 SKUs across 6 or 7 different distribution channels if you don't have technology. So we actually have a very large data set, and we have a data science team that actually helps with pricing. Similarly, if you think about what is important in the offline world is shelf space. So where you're placed on the shelf actually matters. What's interesting is in the online world, the first 3 swipes on your mobile phone are the equivalent of that. And that space is becoming more and more and more expensive. So the question is, how do you actually think about what you can do to growth hack your way? And growth hacking is a term that many online companies use, but it's really how do you get the shelf space in the first 3 swipes without having to pay for it? So how do you understand what each algorithm values? So Myntra, if you sell fashion, for example, values what's called freshness, which is are the styles new, were they introduced in the last 3 months, and brokenness, which is you have a full complete size set. If you know that about the algorithm, you can then plan your inventory in a way such that your products go up on top. Amazon, on the other hand, looks much more for reviews and ratings, and Flipkart for velocity and so on. So in each of these cases, understanding the distribution channel and figuring out technology to growth hack has really helped us. So this is the third thing that has actually helped. And then the last, where we use a lot of tech, is inventory and inventory placement, which is if you have to distribute across India, what is the best way to place your product, and where do you place your product using technology so that you can really avoid air shipping and still get the products on time to your consumers. If you put all of this together, what's been quite interesting for us is, I'll give you a couple of examples. We have a brand actually in personal care called Villain, and Villain does primarily fragrances. In the last 18 months, it's grown 10x. And unlike many D2C startups, we actually, across all our brands, make money. And the reason we make money and we are positive on EBITDA is all of this technology-led growth hacking things that I told you about, because we don't actually pay for it, right? You actually use data science, you use AI, you use machine learning, and you use a tech platform to drive growth, as opposed to just paying more and more money to whether it's a Google, Facebook, Amazon, or Flipkart, right? So Villain has grown 10x. We have a gardening brand, which is the largest online gardening brand in India, called Trust Basket, and that's grown 4x, right? And the reason it's been able to grow 4x and at a reasonable profitability margin is, again, because we understand from product development to pricing to inventory, how do you actually use technology to build a brand? So, one mental model at least all of us at Mensa have is every element of brand building, starting with what new products to launch, how do you price them, how do you make sure that they get visibility, right, which is shelf space, how do you make sure that you get it to the customer at the right cost. Each of these we think of as a technology product and build a tech stack around it. So if you almost think of a brand P&L, we basically go through every line item of a brand P&L and build tech products for each of it. And that's the core of a lot of what we do at Mensa. So the topic that I had is, what is tech-led brand building? And I think tech-led brand building is really, again, just to summarize, built on the following. First, it's basically that there are 2 macro shifts that are happening. which is distribution is democratic, and brand building happens primarily online. And the second is every element of brand building that you can think of, you can actually make into a tech product. And that allows you to manage it. So today at Mensa, we manage about 24 brands. Roughly, as I was saying, 15,000 SKUs. And we're able to do it with a relatively small team, right? And the reason we're able to do it with a relatively small team is because you can actually use technology to manage every one of these processes. And I think if I take a next 10-year view, actually it's one of the most exciting times to be building brands in India. And the reason that's the case is we have a demographic, we have an unbranded to branded shift that's happening, and we have GDP per capita going up. And already all of the e-commerce firms have built the rails on which you can sell, right? At some level, the basic infrastructure has actually been built. And therefore, it's an incredible opportunity at some level to be able to build great brands over the next 10 years from India, but from India for the globe. The last thing I wanted to sort of perhaps say is, if you think about brand building from India for the globe, the reason why most people have been unsuccessful is it's very hard to understand consumers in different markets and very hard to get those products to them in a cost-effective manner. Both those paradigms have fundamentally changed in India and fundamentally changed with the advent of e-commerce. And therefore, my prediction is, we have now 30 brands that are north of 1,000 crores. I think in the next 10 years, we will have 300 brands that are north of 1,000 crores. And at Mensa, what we want to try and do is to make sure that we at least create a handful of them that are household names and that you can build them as digital first brands. So that's a little bit of just a summary of what I wanted to tell you about. I think it's a very exciting space to be building global brands from India using technology. Thank you for having me. Thank you. Yeah, I'm happy to take a few questions, yeah. Yep. Oh, sorry. Okay, I think this.
At what revenue levels do you accommodate startups?
So we look for brands between, call it 10 and 100 crores in revenue, annual revenue. The largest that we have done is about 200 crores. The smallest we have done is about 10. So we look for brands in that space. So the way the model works is we actually invest majority in them with a path to ownership. The founders usually work quite closely with us and become part of the larger Mensa ecosystem. I think there was a question there.
Wonderful. Thank you for running us through some of the models you have. I run a company called 10x Growth, and we are doing multiple SaaS products.
Right.
And I learned a lot in your very brief presentation because I've been also mentally thinking on how to structure. So now, the question was about how do you balance the part ownership? You are basically acquiring the majority stake.
Right.
How do you basically keep them motivated? Is it do you need them for long term, short term?
Right.
Do you want to eliminate them? Do you want to encourage them? So if you can give me, and I have a lot of follow-up questions, but I can take it offline because we don't want to have people.
Yeah.
Yeah.
No, so I think the short answer is it really depends on the founder. I would say about 40% of the founders want to continue with us long term. So then, by the way, we actually have an incentive structure which is structured such that you hit a revenue and an EBITDA and you can make more money, and some of the last stubs get converted into equity. So you become part of the overall Mensa journey. In other cases, by the way, there are people who say, look, I've gotten a brand to a certain level. I don't want to scale it any more than this, in which case we give them a full exit. So I think there's a full spectrum. We can chat more offline.
Just small question. When you acquire, do the people get equity across or only in their brand?
We do it across. We have only one equity.
All right, wonderful.
Thank you.
Yep. Just
Yep.
one quick question.
Yep.
Just a quick question. So you said that you take up brands only at 10 crore plus.
Yep.
I think the kind of people that you have here would be even smaller than that, just about startups and all that. So it would be a great help if you could help them also get their brands going? A.
Sure.
And B, what kind of engagement do you have with these companies? Do you seem to invest in them, or is it a
Yeah, so
revenue
we
based?
actually do more than, we run the brand. So think of us as a digital Unilever or a digital Inditex. So we actually buy majority and actually run the brands. In many cases, the founders run it along with us and become part of the team. I think we're always open to incubation and other ideas. I think in terms of earlier stage, the reason we look for slightly larger brands is the problems of scale up and the problems of incubation are very, very different from each other. And so we look, it's better to specialize in one thing, and I think we're better off actually at scaling than incubating. Yep.
Hi.
Yep, sure. Hi.
Yeah. Excuse me. Yeah.
Yep.
Excellent session. Just one point on fashion. Which category do you see is going to reach the inflection point in the next coming few years? Thanks.
In fashion?
Yeah, in fashion.
Yeah, I'm very actually bullish about innerwear, and I'm very bullish about athleisure. I think both, are incredible categories. Likewise, I think men's ethnic, I think except for Manyavar, there are very few firms that have actually built large businesses. So I think that's another area. But look, it's a $80 billion market, mostly unorganized, so almost every area I think will be great. But this in particular are things that I'm very bullish about because I think you can make money and you can build large businesses.
Thank you.
Hi.
Yep.
Insightful, excellent session. Thank you. What's your biggest structuring challenge that you've faced? Because you sort of acquire not necessarily 100%, a lot of times
Right.
minority stakes, and then you have other brands to manage. So I think that, to me, that sounds like a big challenge that you might be. So I would like to have some insight on that.
Yeah, no, great question. So we do only majority. We seldom do minority. So we are almost majority with a clear path to ownership. I think one thing that's really helped us is to have the difficult conversations upfront rather than later. So I think there is no lack of clarity on what multiples and when we will actually acquire the remaining stubs in the stake. It may take longer to close a transaction, but it's better because I think then you really become partners for the long term. I think that's really helped us. One of our values is to be fair, fast, and founder friendly. With the, it's actually one of the values that we have written down, and we try and follow that. So the answer could be a yes or a no, but we try and get to it quickly, and we try and be helpful in every interaction. I think I must have met 750 odd founders in the last 18 months. We have done 23 actual majority transactions. So, it's...
Wow.
It's,
Awesome.
yeah.
Thank you.
Thank you.
Ananth, on your left.
Yeah.
Economies of scale and data science, are those the only two driving factors, or has there been any third, fourth, fifth factor as well in
Yeah,
your
so
success?
I would say, I think the other one which is missing in that is actually talent and people. So for Mensa to be able to hire performance marketing people, right, we needed 10 performance marketing folks. We had 600 people apply. If you're a single D2C brand, it's much harder to attract the quality of talent. So that's been very helpful. I think, of course, technology and data science has been very helpful. I think the third, in economies of scale that you talk about, I think sourcing and operations are the two big ones that actually make a big difference for us. And lastly, what we don't do for economies of scale is we keep the brand identity separate. So brand design and product assortment stays with each of them, so that there is actually a differentiation in the long term among the brands.
Which is a global brand you admire, Indian, which has arrived on the global screen? Any brand you admire?
I think there are many. So from India, I would say what Fab India has done in fashion, I think has been interesting. And they've sort of grown and scaled and done it well. I think in beauty, Forest Essentials has sort of gone global, and I think they've done a nice job. So there are many examples.
Yeah, hi. I'm Rajesh Singla. I'm founder of Planify. We are a private equity marketplace. So we do get a lot of good companies, which I think we can share with you. So how do we reach out to you?
Sure, we can just chat offline. You can just email me. Yeah, thanks.
Thank
Yeah.
you.
Okay,
All right,
great.
we'll take one last question now.
Yep, sure.
Hi, I'm Siddharth. I wanted to know your thoughts on how I think Thrasio earlier had planned an India entry in which they went back on. They've got a new CEO now. Do you see themselves coming back to India? And if yes, is that competition for us, or is they going to grow the ecosystem?
So one of the things I don't worry too much about is competition, because I think it's a very large market. I think you worry about your brands and your consumers, and I think that's what you really should be focused on. So that's what we do at Mensa. I don't know plans of Thrasio in general, but I think, look, it's an unbranded market. The more players there are that creates brands, the better off it is. It's also not a network business where a single player has huge advantage because of economies of scale. So I think multiple large players can exist.
Thank you.
I think we have one last question there.
Hi,
in the-
Ananth.
Okay. Yep.
It's a great session. Thank you so much. But one question I have is regarding the CACs. So with the ever-raising customer acquisition costs, what are your predictions for the next 5 years, 10 years? What marketing channels are going to serve these D2C brands like Instagram or Google Ads are now serving?
Yeah, so I think the first big thing I would say is be less dependent on paid traffic. So I think, across all channels, CACs are going to go up. So if you build a great product, figure out a good referral mechanism, and figure out ways for getting organic traffic, I think that's the code to crack. Because long term, if you continue to pay for your traffic, it's very hard to create a sustainable business. So therefore, creating communities which are organic matter, right? So that's what I would say is number one. Number two is, in general, I'm a big believer in video. And I think video will get bigger and bigger over time. So I think that'll start to become a large channel for advertising.
Great. Thank you.
Thanks.
Thank you so much, Mr. Narayanan. Ladies and gentlemen, let's give a huge round of
Thank
applause.
you.